I kept saying to clients, this is not normal.
But once an hour, I see the tagline, "Are we in an AI bubble?" And I keep thinking to myself, I just don't care.
Every company is talking about all these AI use cases and how they're making it to basically make their businesses more efficient and more productive.
Tech companies they're hard to kill.
One of them is bottlenecks, but the biggest one is power.
The great thing about technology is it's always there. When consumers change their behavior, there's going to be a technology to help with that behavioral change. The large mega cap companies building out data centers and standing up large language models, LLMs, is the equivalent to building the Voyager ships that are going to set sail, going to go discover the new world and introduce incredible new opportunities, incredible new inventions, discoveries, findings. But the boats haven't even really left the harbor yet.
Hi, everyone. I'm Jeff Nevins. I'm a portfolio manager at Silvercrest.
Hi, I'm Brian Bies, portfolio manager on growth equities for Silvercrest. So, Jeff, we're here today to talk about technology.
We are.
Yeah. Tell me about your journey as an investor and specifically as a tech investor.
Yeah, the journey's been very interesting. I actually started in venture capital covering technology. And so the reason why I think it's been such an interesting career for me is when we were investing in small companies, when I first started my career, I was young. I had no idea what I was doing. It was late 90s, early 2000s, and really got to get into these little nuts and bolts of what these companies do for a living and how they actually try to build a business to $100 million. That's what I found always so inspiring and interesting about it. And then I've been in tech pretty much ever since. Started in the buy side in kind of mid 2000s and love the public markets more than the private markets, but that's a whole nother story.
All right.
How about you? Did you start, did someone push you into technology or was it more like...
Well, my career evolution in portfolio management was a little more traditional. I did not do that private equity angle before, but I started out as a generalist investor up and down the market cap spectrum. And in 1998, I got an opportunity to work on a small and mid cap growth team. And when I was there, one of the many sectors I covered was a portion of technology. And so I was investing in the hardware and networking stocks during the internet build of the late 90s and through 2000 and all that fun that occurred in the early part of that decade. But I wanted to ask you out of the chute, in your opinion, why is technology such a rewarding and maybe a fun sector to invest in?
Yeah, at least for me, I think some of it comes a little personally. Like I've always been the one who wants to buy a drone when they came out, or the one who wanted, I got the first Motorola flip phone when it came out. I always thought that was cool, right? So there's always been an interest personally on my end, and how does this stuff work and what makes it tick and who makes these things and how do they make money? And so to get to your question about rewarding is what I've found working with you over the years is when we get to go meet with analysts, we meet with companies, we go to trade shows, they sit there and actually show you all these little pieces and componentry that go into some product, which is fascinating. Like just the idea that you're emitting light down a fiber optic cable and somehow those data packets get collected together at the other end, and there's some technology that puts them together and makes sound, or it makes whatever it is. So the rewarding part is when you get into all of that detail and you put it into investment thesis, and the stock all sort of starts to work for the reasons that you thought it would or believed it would. And that's when it becomes incredibly rewarding. And I don't know about you, if maybe that's, I don't know if you have, how do you think about it? Is it different?
Well, surprisingly, I am a little less tech curious and have never had that as part of my background. But when I got involved in small cap portfolio management, I realized pretty quickly that the companies that we're investing in for our clients are really operating in a world of giants. And these giants are companies that the small ones are competing with that have better customer recognition, better brand name, more assets, more capital. So it's really an uphill battle for a small company to compete and survive and thrive. And so I learned quickly that you better have some sort of innovation if you want to enter that land of giants and take them down. And of course, technology is an arena that's ripe for disruption and single company innovation for those reasons that you just talked about.
Yeah.
Oftentimes it's the one guy thinking of something new and building a company around it and taking it to places that, maybe few people could imagine on day one.
As you think about the time you've spent in technology, Brian, I come at it from a curiosity perspective, which is kind of interesting. I didn't actually know that you came at it from a different angle, and that's probably why we've made such an interesting team over the years. What do you think are some of the learning lessons? Like, what have you learned over this 25, 30-year career of tech investing?
Mm-hmm. It goes by fast. But I had this experience a couple of days ago, and so we're warming up for a big growth conference that will occur in January here in New York. And the same company has been putting on this same conference for something like 30 years. And I was curious, and so I asked the company to send me the list of companies that presented at the conference back in 2002 and 2005. And those were two conferences that I attended. And it was really eye-opening to see the list of companies that were presenting way back then. And a couple of sort of poignant points hit home about investing in this asset class and this sector. So thinking a lot about small innovation, small caps, and technology. And I looked at the list, and there were just so many memories, so many companies, so many investments that I had made. Many of them were very, very financially rewarding for our clients, but not all. Some were not. But the great thing about that, this arena, is that there's just so many on-ramps for companies to take advantage of some of these trends you were talking about. So I'm looking at this list and smiling often and frowning once in a while. And there was a few companies on that list. So not only did we invest in many of those for our small cap clients and had pretty good experiences by and large, some of those companies are large caps today. Companies that you're invested in that 20 years ago were still small caps. So that is the ultimate payoff. That's the reason why we're spending a lot of our time on these. Hopefully a small company today becomes a giant in a decade or two. But the third realization I had is that tech companies they're hard to kill. These are businesses that are capital light, businesses that can scale up and down pretty quickly when their demand changes. They tend to harvest a lot of cash flow when times are good and put it in the bank, and they don't carry a lot of debt. So the fact that a lot of these companies that I was looking at from 2002 are still in the marketplace today is kind of a testament to really how hard they are to kill, which brings up sort of the balance that a small investor in technology needs to have. There's definitely a part of vision and dreaming and riding a investment theme. But as good as it can be when it's going on, the investor needs to be pretty discerning about. It's great to have the on-ramp to good times, but you must be always looking for that exit ramp, because these companies, it's very, very rare when a company can continue its success year after year after year after year in small innovation, because oftentimes there's the next innovator ready to come on and take its place. So we have to be pretty fluid.
Yeah. It's interesting you bring up the theme, like in growth investing, and I do small all the way up to large cap, and you do small and SMID. So I've seen some of these companies grow up, as have you, and now we can invest in them in our large cap strategies. The couple of things that when you mentioned themes, I described it as scarcity value or growth scarcity, which is, call this a lesson learned. And you need to listen in the market, which is something, a terminology you've always taught me and we always use together, which is when we go through different periods of innovation in technology, it's so important to listen to what that scarcity value or what that growth vector is that's happening. Because when that's happening, you really have to kind of turn your ears up. And to your point about these small cap companies that may have been around in 2022 and are still alive today, they might come alive again. And that's so important.
We are seeing that.
Yeah. And you, out of all people that have ever been around in this business, are so good at going back to companies that you thought you kind of left for dead. You took it off your screen. You decided you would never look at that company again. You're the best at being like, we need to take a look at this again. Right? Just kudos to you. And I don't know how you do that, but you're outstanding at it.
Well, usually the market will kind of tell you, wake you up.
That's fair. That's fair. And I think
something is working, and it's like, okay, maybe there's a round 2 here.
Exactly. And there always is. And even if it stays another small cap company, there still could be a round 2 for a good 2-5 year time horizon, right? And we have to take advantage of that. So that was sort of one lesson learned, that you really need to keep your eyes open.
Open-minded.
Open-minded.
Agile.
That's the best way to say it. Yeah, open-minded and agile. The other thing that I've learned over the years is it's kind of the same thing we were just talking about, which is the playbooks. So I think as investors and institutional investors, whether it's analysts or PMs, is you always have kind of this playbook that you're doing, whether you think you're doing it or not, which is, I look for the secular growth, a big market. I look to hopefully buy it at a reasonable price, a management team I like, or whatever that playbook is, right? But when you go through periods of innovation, I feel like that playbook kind of needs to be revised. You have to rethink it. I don't know if you would agree with that or not, but you have to kind of rethink. Yeah. I mean, or maybe hone it in a little bit better because things change so quickly, right?
That's right. And so when you find a trend, a disruptive trend, and this is when the timing can get really lucrative for investors.
Right.
The best thing to do is to really get behind it. And we've got a thematic approach that kind of allows for that. And so it can be it can do a disservice to clients if you find a very large theme, and especially in small investing and SMID investing, and pick one company to benefit from that theme, because when it goes on, it can be strong, it can be powerful, it can be short-lived, a couple of years. So it's not an overnight thing, but a big theme can last a couple of years. Sometimes they can last, like the iPhone, decades and decades.
Yeah.
But some of them last a couple of years. And so if you limit yourself to just that one company, you probably miss out on some pretty good gains. And it's like I said earlier, the on-ramps, there's plenty of on-ramps to have really good dynamic growth for these companies, but you need to start looking for off-ramps pretty rapidly to make sure that you harvest the gains that you've earned from some of those early investments. So you're right.
Yeah, well, that was a great kind of background, bringing back old memories here as you were talking about stocks. But let's talk about today, right? Let's talk about what everyone else is talking about in the media and the market, which is this whole AI bubble, right? And what are your views about the word AI bubble and kind of how we came to be here? Because this just didn't happen overnight.
Right. We as investors should be very fortunate for this AI experience, because it really has guided us through a little bit of a wilderness in the broader market. And trying to keep it focused on technology. Think back to the heading into the end of last decade, into the COVID experience. The technology theme of the decade was cloud computing and software applications moving to the cloud, and that was terrific. And then we had the tumult of COVID, and that birthed another terrific technology investment theme, and that was this whole work from home experience. It goes a little hand in glove with cloud computing, but boy, we saw a lot of stocks, specifically software stocks and some communication stocks do wonderful things post-COVID, because the great thing about technology is it's always there. When consumers change their behavior, there's going to be a technology to help with that behavioral change. And this is a great example. Consumers wanted to work from home and they needed technology to make it happen. And so that was wonderful, and it led into 2021, 2022, software companies being very popular, very highly valued.
Very well
ultimately
said.
to come to a little bit of a short-term demise. And so it looked pretty bleak for broad tech investing until the start of the AI spending experience. We all remember when ChatGPT was sort of officially launched. Now, it had been in the marketplace for years earlier that the really, really early adopters knew about, but the general population started learning about it just 2 or 3 years ago. And Jeff, in your larger cap portfolios, you've seen some unbelievable stock rewards from these big companies, mega companies that most investors could never imagine could have the growth that they're putting up. Why don't you tell us a little bit about some of the highlights there?
Yeah, I mean, I don't think I could ever imagine. I mean, large cap growth in general for the last 15 years has been the place to have your money. If you put 100% of your money in large cap growth, really in 5 to 10 companies, pick 10, maybe 15, you'd be doing phenomenally well. The last since 22, or when ChatGPT was introduced, the growth that we experienced in 2023 was unbelievable.
Mm-hmm.
I think the market, I'm going to get these numbers wrong, but the market was up well north of 30%. I think it was 40%. And then 2024, something very similar, which is just tremendous returns. And, I kept saying to clients, this is not normal.
But enjoy it while we have it.
Let's enjoy it while we have it, right? So I think what's happening today is and this always happens when we have periods of just exponential growth and exponential crowding into stocks, concentration in the index, which is a whole nother topics we could all cover. What happens is then all the naysayers come in, and that's what's happening now, right? All the naysayers are coming in saying this is a bubble. This is, there's circular financing. And a lot of these things are some of them are fair, some of them are not, right?
And the interest in the naysayers is probably amplified by the fact that there's a lot of short-term traders in technology that we have to deal with as long-term investors. We have to respect maybe their hand in the short term on the till. So you're probably getting some of that naysayers are coming from that crowd.
Absolutely. Yeah, absolutely. These naysayers are, I think that everyone's drawing these parallels to 1999 and saying, okay, this is 1999 all over again. Like, we know how that ends. I think that the biggest differences today are the use cases for AI. Like back in the telecom bubble, you would lay, all the companies back then, whether it's Quest, WorldCom, pick your company, none of them exist today. They would be putting out all this fiber, and then they're supposed to create a business model on it. The problem with that is these business models were losing a ton of money, and a lot of them, we all know, went defunct, right? Today, AI revenue is supposed to be, I've seen estimates of over $60 billion, and that's not the hyperscalers that are just renting GPUs. That's actually AI use cases. And if you look in the third quarter, this recent third quarter, September of 2025, and you go through the transcripts of not just the AI companies, but you go through broader corporate America, whether it's in healthcare, consumer, industrials, every company is talking about all these AI use cases and how they're making it to basically make their businesses more efficient and more productive.
Yeah, it's still very early days. It's still in the planning stages. I've got this metaphor that I was thinking about, and it was kind of the old world exploring the new world. And what we're going through right now with the large mega cap companies building out data centers and standing up large language models, LLMs, is the equivalent to building the Voyager ships that are going to set sail, going to go discover the new world, and introduce incredible new opportunities, incredible new inventions, discoveries, findings. But the boats haven't even really left the harbor yet. So it's very exciting.
You are the king of analogies. I mean, absolute king of analogies. Oh my God, that's outstanding. That's a very good one.
And how we're seeing the small cap universe is
that is a great point.
Is your folks are ordering up the ships and building the ships, and that is certainly a game for big companies. These are expensive assets. The big companies are the ones that have the balance sheets to do it. Our companies are the ones, maybe supplying a little bit of rope, maybe supplying a little bit of lumber to build these ships. And so it's been this cascade of dollars coming down to small and mid cap stocks that we're also seeing the exponential growth that in our small supplier companies that you've been seeing in the big ones.
No, and I think Brian, talk about that a little bit more. And I do small cap as well. You're in it more on the growth side of it with your portfolio and the SMID side of it. But talk about a little bit more of these ripples that are coming down from large cap companies. I don't think people really appreciate that. Everyone just, focuses on the big mega cap companies, and that's great. And they're doing fantastic, and they're phenomenal companies, all this cash flow, this, that, and the other thing. But there is this massive ripple effect going down the entire market, and you're seeing all of it.
Yeah. The picture, the illustration I used to talk to my clients about. With the big GPU supplier, the biggest company in the market cap in the world, I'd say folks didn't grab this GPU chip and throw it in a room and close the door and say, give us AI. Right. It takes a lot more to stand up these data centers. And one of the areas that all of our portfolios on the growth side have identified really early on is the need to interconnect all of these assets, all these data centers, to create essentially one large network or one large computer on which these models will run. And so it's been very fortuitous. And I think my experience as a networking investor 25 years ago has come in handy because I really have an appreciation for how telecom dollars are spent, the connectivity requirements for putting these assets together. And a lot of the technologies are similar. Heck, a lot of the companies are the same as back then. And so you talked earlier about maybe a second wave. We're getting a second wave on some of those companies that were on that investor conference list in 2002 that hibernated for a while and are now back and really having explosive growth. Yeah. So that's one of the ways. I think another thing that I'm going to hand it off to you to talk a little bit about, not only is it connecting these data centers, powering these data centers has been a game changer. Thoughts?
So if you to get to how this conversation sort of started, which is AI bubbles and the terminology that everybody's using, is power is a big, probably I think so as you list out things that are possible issues of this AI bubble and we don't know what the answer is going to be. We don't know how this is going to end. We do know that the next 10 years is going to be significant growth. But if you look at the couple items on, like I have a list of the top 5 red flags of, is this an AI bubble? I'm getting to your question. Is one of them is bottlenecks, but the biggest one is power. And so now you're seeing not only utility prices going up, you're seeing companies that are trying to build data centers in Wisconsin where we are, and all of a sudden the consumers are revolting and they don't want it because they think their utility prices or their electric bills will go up, which is true. So they're moving it to another area and trying to get in there. You're also seeing now data center companies use Bitcoin miners, which is, we haven't even gotten into crypto, but Bitcoin miners that were built they have a lot of GPUs. And their data centers are set up to run GPUs. So now they're going to them because they have the capacity and they have the connection and the contracts to the power companies, right? Now, at some point, this will become a bottleneck. As far as we can see over the next 18 months, it's not, but it will become a bottleneck at some point. Mm-hmm. But I don't know what you think of I know I'm going back to the AI bubble part a little bit, but do you have an opinion on this?
Sure do. Sure do.
Okay, here we go.
It's not much of an opinion. Every time I look up and I see the financial TV, the financial channel on TV, about once an hour I see the tagline, "Are we in an AI bubble?" And I keep thinking to myself, I just don't care. I really don't care.
Tell me about this.
Okay, so like I said, those ships haven't even left the port yet, and there's so much discovery to be had. And once the AI infrastructure is complete, and it'll probably never be totally complete, it'll always be evolving. But once it's complete, like you had mentioned earlier about the touch and the reach to companies, to all companies, it will dramatically change every industry that we know of today. And there's some really appealing early movers that I think we can look at for opportunities. We've already seen some things in the defense world, which has been a huge area of dollars being spent on new technologies, many related to AI. Robotics is a very lucrative opportunity as we want as a country to bring more production on shore. We're probably going to lean on robotics heavily, and robotics will lean on AI to put brains in these inanimate objects so that they can perform tasks. General autonomy, cars being the first example, but wouldn't it be great to have an autonomous dish or a washing machine to do your laundry? That's kind of the holy grail for a lot of people. So we're working on that. And there's healthcare. I know you've got some experience in healthcare, so I'll give you an opportunity to maybe talk about that. But finding energy, decentralized finance, education, every industry has got a chance to be touched. And there's probably companies that are certainly not public yet today. Heck, maybe some that aren't even alive yet today, that will have a fantastic future because of what this technology, this single technology, will enable starting tomorrow. Hasn't even started yet.
Yeah, I agree.
Thoughts on healthcare?
I think healthcare is the one area that, to your point, the ship hasn't even left the port. But it is the one area that has so much data on clinical data, information, and DNA sequencing and things like that needs AI because it's the most powerful tool to actually make all these computations, find similarities that can help. Everyone talks about cancer, so I'll just mention cancer, help cure patients. I think that's a massive opportunity. It's still unclear, how that's all going to play out. Again, the ship hasn't left the port. The other areas that is fascinating that it's happening in in transportation, there's companies that are using AI to help automate a lot of laborious tasks internally, and all of a sudden their margins are going up, right? Which we have, it's very unusual for a labor-intensive business. I've seen it in automotive insurance claims. So all these insurance companies are, rather than, if you get in a car wreck, you would have a claims estimator come out to your house. They don't need to anymore. You take photos of it and the AI will synthesize it and say, actually, this is the repair and these are the repair shops you should use. Mm-hmm. It's fascinating. And it doesn't end there. And I think a lot of the companies are in this situation like a retailer, brick and mortar retail. Just imagine a brick and mortar retailer in the late 90s and Amazon comes to fold, right? And all these companies are sitting there saying, do we need to adopt e-commerce? Do we need to do something? Or is Amazon just going to go under? Because we don't deliver to clients. We don't do this stuff. So, but today, I think you're seeing faster adoption, but it's very similar and analogous in that sense where these companies need to adapt. Otherwise, their competitors, if they haven't already, are going to get ahead of them. And that's kind of the game today is a little bit, game's probably not the right word, but that is a little bit of the strategy of every company needs to start employing or at least testing this.
Yeah. I think it gives us a real advantage then to be broad growth portfolio managers because there will be a day when the large cap companies aren't getting paid just for committing to writing checks. But all those benefits will start to accrue to all companies. And so our growth teams are really looking at all industries all the time, again, with that open mind, with that agility to figure out what the next beneficiary will be. And it's really helpful as a team to have large cap, small cap, and everything in between experience. We really we shouldn't get overly surprised because we've got great dialogue up and down the cap spectrum and across all sectors, and here at Silvercrest, even across the globe. Great resources to lean on.
We do.
So bottom line on technology, how are you preparing the portfolio for 2026 and beyond?
It's a great question, Brian. It depends on the portfolio, whether it's small and large, but the themes are the same. Every data point when it comes to AI and a lot of the things that are, and it doesn't have to necessarily be AI, it could just be changing the way businesses are doing things. Like we're finding, we obviously have investments that are going into AI, their infrastructure, but we're also now seeking out companies that are benefiting from AI, because all of a sudden you find a company that, to your point, maybe, it depends what market cap we're talking about, but has been kind of hibernating for a while. They're the ones that are actually adopting AI and starting to use it internally in a labor-intensive model that maybe we would invest in, maybe we wouldn't, but all of a sudden it could turn into an operating margin business that used to be 10 and now it's 15 to 20. Like, that's interesting.
Yeah, we're seeing huge changes in profitability.
Yeah.
Before our eyes.
Right. So I think that's something we're paying more attention to. Yes, there's the infrastructure companies will still be involved with, but it's more, I think, more about that sort of second derivative of who's benefiting and who's kind of has enough money or the guts or the willingness to go out there and start investing before everyone else does.
Yeah. All right.
Yeah. You would agree or not, but I think you're finding some of those too.
Yeah. And I'd say maybe close on one area that we've been, and I touched on it briefly in the past, but one area we've been really scouring for new investments on is something we call physical AI. And so putting AI into these devices in the wild, in the real world, the ones that need to think on the fly when they're in a factory, when they're in a vehicle, when they're in an aircraft, or you name it. There's a lot of companies out there that are eligible to benefit from that. And once the stock market stops focusing on the people writing the checks and starts to focus on the people receiving the checks, it could be very, very lucrative.
What do you mean by physical AI? Explain that to everyone.
So this lamp, for instance.
Yeah, sure.
There can be some intelligence that this lamp, during different times of the day might power itself differently. It'll sense the ambient light in the room. It'll sense how much light it needs to kick out. It might even sense how much power it needs to pull, or the time when the power is cheap enough for it to pull. And that AI will allow that inanimate object to think, but it's going to require some new guts in the next lamp to be built. And those are companies that make those guts. Those are sensor companies. Those are semiconductor companies. Those are interconnect companies, software companies. All those companies are just ready to have, a hero's day for many, many years to come, because once AI gets turned on and gets pervasive, there's just so much benefit out there.
The king of analogies. We're using a lamp sitting in between us to describe physical AI. That was outstanding. Right on. That was totally off the.
I couldn't get the coffee to work.
I
figured that was too hard. I couldn't use that metaphor. So, well, it's been great talking tech with you,
Brian. It's been an absolute pleasure talking tech. This has been outstanding. I've enjoyed it, and I can't wait to see what we got in the future.